and that we weren't just watching this business, go down 3 years in a row. So we came up with what we thought was a good plan, maybe too aggressive, and it was interpreted, in our opinion, quite badly.
Transaction Capital has been, in the words of those who are not so polite, a shit show after the last week or so. We've got the Chief Executive, David Hurwitz, to tell us what the heck is going on. Well, David, when we spoke probably 6 months ago, everything was looking good. I was complimenting you on your 10 years of fantastic performance as CEO at Transaction Capital, wonderful returns that you'd achieved. And then suddenly you brought out a pre-market close announcement, and the share price, which I'm just going to bring people up to date on who haven't been following the story. Last Monday, it was 28 Rand. It started the month at 31, which is kind of in the same area. On Tuesday, after the pre-close announcement, went down to 17 Rand, then 14 Rand on Wednesday, 8 Rand on Thursday, recovered a little to 11 Rand 50 on Friday. On Monday, another announcement saw the share price falling again to 10 Rand 65, and today it closed 11.69. Now, I know you're on a charm offensive, so we have to understand exactly the situation that you're in right now. But surely with something like this, you would have known, or you must have known, that the news that you're going to bring out to the market would not have been happily received.
Hi, Alec. Yeah, thanks for having me on the show, first of all. We really didn't expect the type of response that we got. I think everybody understands the state of the South African environment. More importantly for us, I think most understand the state of the minibus taxi sector. And, what we've seen is SA Taxi's earnings drop for 3 years in a row. They obviously dropped during COVID, but then dropped again in 2021 off that base, down about 4% off 2020, and then again 26% in 2022 off the 2021 base. So we've really been battling with the sector over the last 3 years. And the main reason we see is that this sector has not recovered fully. When COVID came, we all expected the minibus taxi sector to recover very quickly and fully. And that was based on our 20-year experience in the sector. We all know that the minibus taxi sector is absolutely built into the South African economy. It's structural to South Africa. Our economy can't operate without it. When people wake up in the morning, if they're socially or economically active, they step out of their house and the first few rands they spend will be in the sector. So it's non-discretionary spend. And for this reason, we expected the industry to recover very quickly, which we did see, but not fully. And there were various events that happened over time that kept on kind of delaying this recovery. So first it was COVID, which was the initial downturn. Then we had the second lockdown. Then we had the rioting in KZN. Then we had the taxi unrest in the Western Cape. Then we had that terrible flooding, which closed the Toyota plant, and that's our main facility, or the main facility that produces the product that we finance, which is the minibus taxi Toyota. And then, Alec, we saw a whole bunch of other things. High interest rates, which moved up very quickly, high fuel prices, no fare increases. I think only one fare increase over a 3-year period. The commuter movement reduced, which we thought was quite a structural thing. And the price of the car kept on going up. The minibus taxi price kept on going up for 3 years. So really, really difficult times for the sector. Our key metrics did not change much. Our collections kind of remained relatively stable, but not at a full recovery. So somewhere between 85 and 95%. We tried clever things. We changed the way we grant credit. We changed the way we collect. We cut costs. We changed our product construct to make it more affordable. But none of that really worked. And our main strategy was to continue repossessing and refurbishing everything that we repossessed. And I can talk about that a little bit later, but that strategy also didn't work. And this has now resulted in us coming up with a new strategy which requires our provisions to be increased and hopefully to reset the business on day one today, so that going forward it's got a better chance.
Just to look at the structure of the assets that you're funding, South Africa has something called the Motor Industry Development Program. And as a consequence of this, all vehicles in South Africa cost 30% more than they cost anywhere else in the world. You could go and get a car from somewhere else, or a taxi in this case, bring it into South Africa, it would cost you 30% less than what you have to pay in this country, because the government forces you to pay this so that it can pay the motor manufacturers to stay in South Africa. Now, that's been something that many economists have been very angry about for a long time, but it is something that the government has defended because it says we need a motor industry in this country, even though there are no inherent advantages that we possess. From your perspective now, you have at Transaction Capital really hit your heads against this law. Are you at least trying to lobby that something gives on this? Because South African consumers don't really understand that they're paying 30% more for their vehicles than they should be paying, were it not for this motor industry. And if you're financing an asset which has been inflated by 30%, at some point in future, that has to come back and bite you, or not?
Yes, so I think one of the biggest impacts on the sector is this increase in the price of the minibus taxi. It normally goes up by about anything from 6 to 8% per year. And now, of course, you've got this added inflationary pressure, which is exactly what you're talking about. We have discussed this with government, and we've actually come at it from a different angle and said, we're a small cog in the motor sector, specifically the new motor sector. Obviously, we've got WeBuyCars, which is positioned differently with used cars. But we've said, as far as government is concerned, what we really need is some type of subsidy going into the minibus taxi sector. So if our operators are going to pay more for cars, then they should at least get some benefit coming back from government in terms of subsidizing public transport. I heard a very interesting stat today that I think it's only Turkey where their public transport system, in the entire world, where their public transport system can operate unsubsidized. Elsewhere in the world, there's subsidy coming from government. And what we see over here is there is subsidy, but it goes into bus and train, which moves around less than 1 million commuters every day. And minibus moves around 15 million commuters a day. And just in the ordinary course, it should have some sort of subsidy. And now what we've seen is that during COVID, these are the guys that went out, moving essential workers around at a loss because loads were limited to 70%. And everybody knows that last 30% of your business is the profit margin, 70% covers the cost. And these operators operated at a loss during COVID, have continued to operate now under terrible conditions and really have had zero support and subsidy from government. So we as taxpayers are all paying for some types of subsidy, but the money's going, in my opinion, to the wrong place. Bus and train.
I'm sure there are many people who will not disagree with that. And given the history of this country, many of the workers live a heck of a long way away from their workplace. So as a consequence, they have to use some kind of transport. It looks like such a complicated scrambled egg here, which is not going to be that easy to unscramble. I've spoken about the motor manufacturers who are based in South Africa who are being heavily subsidized by taxpayers indirectly through the cost of cars. You've spoken about public transport, which in South Africa is not being subsidized. Surely, just to digress from the Transaction Capital story for a moment, surely there would be a bit of a powder keg going on here, because we saw the role that the taxi operators played in quelling the riots in KwaZulu-Natal. What if they switched that around and became activists rather than, in that case, where they were actually helping to keep things calm?
Yeah, I mean, the industry, over the past few years, I think the industry has done well in isolated events, to pull together and, create good. I think certainly what we saw in the riots, we did see the industry really come together nicely. But But unfortunately, it's quite a fractured industry in terms of the fact that there are 250,000 individual taxi operators or minibus taxis in South Africa. Yes, there is Santako and the NTA, which are the two largest bodies, Santako larger than NTA. But it's quite difficult in actual fact to get the industry to all be aligned at one point in time. So unfortunately, we haven't really seen the industry, become activists for good across the country.
It's so interesting. But when you then look from your perspective, from Transaction Capital's perspective, this has been the bulwark or the cornerstone for many years of your business. When I was having a look back, the last time we spoke, I looked back to 2020, where 70% of your earnings were generated by SA Taxi. That went down last year to 24%, and clearly this year is going to be even less than that. Is it not an industry that might have had its day as far as a rapidly growing company, which is the way you've always positioned yourself, is concerned?
So you're right in terms of the fact that it's a lower component of our earnings. That's a consequence, first of all, of the very high growth from WeBuyCars as well as Newton, and of course taxi going backward over the same period. But we are still absolutely committed to the minibus taxi sector. And what we're trying to do is we're trying to reset this model so that, yes, it will be a smaller part of our business, but it will still be a profitable and growing part of our business. If you kind of reverse back to our business model prior to COVID, really what we realized is that if we repossessed a taxi, we could refurbish that taxi and sell it into what we call kind of the middle end of that market. So at the top end, you have operators who are operating routes which are extremely profitable, and they can afford to buy a new Toyota, and the route can afford to pay the installment on a new Toyota. And we, together with the banks, serve that end on of the market. On the bottom end, you've got the operators who are on routes which are not profitable enough to service any type of finance agreement on a car. And we all know what those type of routes look like and what those taxis look like. That's somebody who, begged, borrowed, and stole, well, hopefully not stole, but begged and borrowed family and friends to be able to buy a taxi. And they're now running that taxi over a 15-year period and can't really afford to buy a new taxi. And then there's a thin middle, and that operator is running a route which is able to finance an installment on a second-hand car, but not a new car. And what we realized we could do is every car that we repossessed, we could refurbish and then resell into that sector and refinance into that sector of the market. And that worked beautifully for, many, many years. This business was started in the early 2000s, and that was kind of the business model, and it really worked well. What we saw happening during COVID is, first of all, that we weren't able to repossess for a period during COVID, and our book also aged more, well, just like everybody else's, but it aged more than we were used to, and hence we had more repossession to do and more repossession to catch up on that factor. So we were taking more cars off our portfolio in the form of a repossession and had to refurbish more of them. At the same time, what we were seeing is that middle segment was actually starting to shrink because of all the pressures I spoke about earlier, interest rates, fuel prices, etc. And they started to fall. These operators or these routes started to become less profitable so that it couldn't afford a QRT. So we had more repossessed vehicles to refurbish and sell into a segment that was actually shrinking. And that was actually the strategy that we followed the whole way through COVID. We said, we'll keep on repossessing, we'll keep on refurbishing, and we'll keep on refinancing these second-hand cars onto our portfolio. Eventually, on the hope that this sector would recover. But eventually, when we kind of got back in January and then saw the impact of load shedding, which was just another event creating traffic density and again, a delayed recovery, we thought we actually can't carry on with that strategy. We need to change the strategy, which is now to say, we believe that for every 4 cars we repossess, 3 will be refurbished, but 1 must actually be auctioned or scrapped. And once you start on that route, you actually have a greater loss. What we try to do is account for that loss in one hit upfront, which is actually required by IFRS. It's a forward-looking provision, which then says this is there's a step up onto a new loss ratio, but your business is still sustainable going forward on this new basis. And that's what we try to do. But I think the market just viewed it as either too aggressive, or else perhaps they misinterpreted it to say there's a problem historically in the portfolio, which is not the case.
So when one has a look outside of that very serious problem that you've spoken about, what many in the market are angry, as we've seen it on we have a WhatsApp group on BizNews for premium members, and they're pretty vocal about the fact that you sold a big chunk of your shares in December, and that was at a much higher price than exists today. And their view is that, including from David Hurwitz, who used to be the managing director of Sun International, so it's a guy who's been around the block, that you would have known what was coming down the track, and that you, in fact, embarked on insider trading.
Yes, I mean, that's a factual question. Did I know or not? And quite frankly, did the other directors know or not? If the other directors and I would have known that we were following this strategy, which has got such a big financial impact, we would have had to disclose it immediately. So absolutely, I did not know. That sale was really driven by a leveraged position that I had against my stock. I'd pledged my shares, a security for a 47 million rand loan. The share price immediately after results, which was on the 15th of November, was in the low 40s. It moved down to the low 30s over about a 20-something day period. And I got a call from our banker saying that my collateral had reduced in value and I'd breached a covenant, and I was required to reduce my exposure by 35 million rand, which meant that I would have gone down from 47 million rand to 12 million rand. But still have a big chunk of my shares still pledged, which really didn't make sense. I engaged with my other fellow executives. I took the decision, or the trust then took the decision, that we should sell enough stock to settle the debt in full and to pay any capital gains tax. I then requested permission from the chairman of the board in terms of our trading policy. We did not know any of this. In actual fact, we had just articulated our strategy in November, which said that we continue to repossess and refurbish. There was no talk of all of a sudden scrapping more of our vehicles. And certainly we had no idea of what the financial consequence of that would have been, because we hadn't even come up with the idea. So it's interesting that people, can get into my head and our board's head and work out what we knew. But clearly we didn't. Everything was above board, and that was the trade that I did. Just to give a bit of just a sense of where my mind was in November, is to say that on the 22nd of November, my share options and various other executives at Transaction Capital, our share options vested, which means that you can now take delivery of the shares. And executives do different things. Some executives, or most executives around South Africa, take those shares and sell them and keep a portion of the proceeds and pay their income tax, because it is an income tax event. Some executives take delivery of the shares and sell just enough to pay their tax and keep the rest of the shares. And the minority, which is what I actually did, will take delivery of all the shares and then take cash out of their own pocket to pay the tax. That's what I did in November. That's on SENS. People have failed to, if you are so interested, it would be nice if people actually did a little bit more work. That's what I did. So in the middle of the end of November, the 20-something of November, I was actually trying to accumulate TC stock. I wasn't trying to reduce my TC stock. And I think I showed that. I think I bought took delivery of about 150,000 shares at, call it 30-something rand a share. So, that is a decent amount of money. And lo and behold, 20 days later, I was forced to sell a block of shares. So, those are the facts. I really don't have much more more to add. And it's actually all been out. It was all out on Sens then, and we put out to Sens again, just with a few, highlights around that again. I think that was last week.
Thanks for explaining that. Forgive the way I look now. We have load shedding, and fortunately, my battery is still kicking in. We live with this in South Africa, but it seems like the lights have gone. But David, let's move on to the next issue, which is the founders of the company. And you did clarify this in a Sens report on Monday. The three founders have a lot of shares that are pledged as security. The announcement on Monday said that doesn't matter what happens to the share price, they're not going to be sold out. But there would have been uncertainty amongst people who know the company very well ahead of this event. Can you just clarify that for us as well?
Yeah, so it's not really for me to talk about the founders, other than to say because I don't have insight into their financial affairs. But what the founders have informed us, which was in the sense, is that I think it's 109 million shares that they own. Those shares have not been traded. The last time the founders traded any transaction capital shares was just prior to COVID, I think in February 2020. I think it was February 2020 when they sold some shares, and they haven't been required to sell any shares, and they've informed us that they have not sold any shares. So really what we're trying to do, Alec, is we're trying to dispel rumors, as and when they come at us, because there is there are lots of stories going around, and the story was that that's what's forcing the share price down. The founders are in a forced sale. So as we go along, we need to kind of dispel these rumors, because I think it's important that people are trading on fact and not rumor. The other rumor that was running around the market was that we were planning to do a huge rights issue. The board has had no conversation about any rights issue. And that was also in that Sens announcement, where we said we don't think it's, we actually said the board is not contemplating issuing any shares. So, that was to dispel that rumor as well.
So if I understand correctly, the founders are not being forced to sell their shares, and that's not where the downward pressure on the share prices come from. And secondly, you have the sufficient capital in the business that you don't have to go to shareholders and raise additional capital, which would be the point of what you said of a rights issue. Those are two concrete facts?
Yes, absolutely. We have, as I say, I can't talk for the founders, but that is what they've informed us. And I'm absolutely, I've known these guys for 20 years. I'm sure it's absolutely true. There's no reason why it wouldn't be. On the second one, 100% correct. We are sitting with about 900 million rands worth of capital at a holding company level, and we have facilities of about 500 to 600 million. Within the businesses underneath, WeBuyCars is highly cash generative and doesn't really require any capital or much capital at all. Newton, also highly cash generative, but does buy those non-performing loan portfolios that we then collect. And they also have lines of credit available to continue with that strategy. And then if you look at SA Taxi, first of all, over the 3-year period where we saw the stress, transaction capital kept on putting money into the business, culminating in about a 2 billion rand shareholder loan. And in the initial announcements the previous Monday, on I think it was the 13th, we told the market that we will capitalize that loan. So the capital already is in SA Taxi that was required, which I think is very important. And then SA Taxi 2 has about 1.9 billion rands worth of facilities that are still available. No funder has contacted us at all to tell us that they're pulling any facilities. We have on the front foot gotten out and spoken to all of our funders. I think we've probably covered all of them. We've got about 40 of them, but we've certainly covered the big guys, which are the banks in South Africa, as well as some large DFIs in the US and Europe. And, none of them have informed us anything otherwise. And in addition, we've actually already received a letter from one of our banks saying that our facilities are in writing, our facilities are in place and they remain in place and are available. So, we're very lucky to be so well supported. I think over the years, we've actually shown our debt investors that we have been a safe pair of hands. And that was actually our first priority, to make sure that the debt investors all understood what is going on here.
In Monday's announcement, you said that you will not be exercising the right to acquire more WeBuy, or a bigger stake of WeBuyCars. Also, just clarify that for us, please.
So when we initially did the deal with WeBuyCars, there was a series of options which would allow either Transaction Capital or the founders, to be the founders of WeBuyCars, to be able to sell, for them to sell their stake in their remaining stake in WeBuyCars, or for us to buy the remaining stake in WeBuyCars over a period of time, which would have been about 7.5% at the end of this year, another 7.5% at the end of the next year, which would take us to 90% by the end of 24, 90% by the end of 24, and the last 10%, I think, by the end of 26. Speak under correction, but I think that's correct. What we were planning to do prior to all of this happening was to, that's now my lights going off.
It's fine. I can see you clearly.
There we go.
Carry on. Keep going.
The generators kicked in. What we were planning to do, Alec, was we were planning to accelerate that acquisition and do 15% now, pretty much this or next month. Obviously, that would have been good for Transaction Capital, because we view it as a high-growth, very well-run business, high-quality business, which would allow us to own more of it earlier. But the benefit would have been for the founders, that they could have kept that last 10% for a longer period of time, because they still see good growth coming from the business. So that is what we had planned to do. We actually hadn't signed any agreements. Then this happened, and what we had been talking about was that we would pay the founders 70% in cash and 30% with shares. And at this price, it's just not a good deal for us. It's just way too dilutive to be issuing Transaction Capital shares at such a low price. So we contacted the founders and agreed with them that we'll just revert back to the original set of puts and calls, which are actually still in place. So that's really what that was all about. We don't think it's the right thing to be issuing shares at this price.
But just as far as commitment is concerned, you do have a lot of money in the bank, as you've explained. Why are you not buying back your own shares if it is at such a low price?
So I think what the market, it's actually a very interesting question, and we actually debated this for quite some time. But I think what the market has shown is that they are concerned about liquidity. And we've gone out in the front foot to talk to everybody about that. But we didn't want the market to see capital moving out of the business. We think it's the right thing to do. We don't want that to be misinterpreted. We issued a SENS last Monday, which we think was, yes, earnings are going to be down, but we think we wanted to show that we had a plan, and that we weren't just watching this business, go down 3 years in a row. So we came up with what we thought was a good plan, maybe too aggressive, and it was interpreted, in our opinion, quite badly. And we're very careful as to what information we're putting into the market. We're trying to be as deliberate as possible to make sure that there's no room for misinterpretation. And I really don't know how people would interpret a share buyback.
Just to close off with, I did ask Corky Koeman, who's the preeminent financial services analyst in South Africa, what he made of Transaction Capital. And his view was that it has gone from a high growth company, in other words, an exponentially growing company, to no longer one of those. The growth is not exponential anymore, and hence the share price is now re-rated. So he wasn't talking about you going bust or anything like that, but he certainly did say that re-rating was justified on the fact that you're no longer growing rapidly, and in fact your earnings will be declining in the year ahead. How will you regain that status as an exponentially growing company?
So the only way you can regain that status is through delivery. I think there's a question of, market credibility, and then also, the issue of, are we a growth company? And, both of those things are only regained through delivery. If you take a look at our businesses, Newton continues to grow, and all the structural elements around that business are supporting growth. So elsewhere in the world, nobody wants to work. There's this great resignation. Consumer-facing businesses in Australia, the UK, and the US need staff to be able to engage with their customers, be it collections, be it customer retentions, be it dispute resolution, be it customer service, whatever it might be. And in South Africa, we have an abundance of that staff. We have all of the right technologies to do it. We're in the right time zone. Our competitive areas like India and the Philippines did not do very well with work from home. And we are growing international revenues off a South African cost base, which is a great business model. And I think the structure of that, and there is actually government support for that in South Africa. That's one area where we get fantastic government support. So that business, there's been no change. WeBuyCars in the long term, we still view as a high growth business. I think our market position is fantastic. We spoke a lot about this on our show before. The technologies that we have are great. I think the moats around that business is huge. We've, got the infrastructure, we've got the data set, we've got the trusted brand in a stigmatized sector that we spoke about that last time. And, long term, yes, that sector's having a bit of the 2022 was a purple patch for, the used car sector, and 2023 was kind of a reversal. All of a sudden, from having no new cars available in 2022, you've got cars available in 2023, and you had great consumer confidence in 2022 and much lower consumer confidence. So, a bit of a shift in the market, but there we've got a great market position and we see fantastic growth. We're building that new business, Gomo, which we probably don't have time to talk about, but again, a great growth prospect. And I'm hoping that we can rebase SA Taxi to be a smaller, more efficient business. Never going to grow at the rates that we see these other businesses growing, but, hopefully a good, solid performer. And, with the other three businesses in our stable, together with a solid SA Taxi, I think we can regain kind of a growth stock rating again. But as I say, only time will tell, and we have to now put our heads down and deliver that as management.
But the key thing is that you are well funded, you aren't going out of business anytime soon, and you are now getting that message out into the marketplace so that people can understand exactly where Transaction Capital is. David Hurwitz is the Chief Executive of Transaction Capital. I'm Alec Hogg from BizNews.com.